Hey everyone, Taiwan Semiconductor is one of the best performing businesses in the world, and I'm talking about performing in terms of revenue, profitability, cash flow, and innovation. But the stock price doesn't really reflect its capability, and one of the reasons for that is the geopolitical concern. And so Taiwan Semiconductor is taking steps to alleviate that concern from an investor viewpoint, and in terms of business viewpoint, they want to diversify their manufacturing base. And so in this video, I'm going to discuss a little bit more about what Taiwan Semi is doing to alleviate some of that geopolitical risk. So let's take a look at these details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so Taiwan Semi chairman Mark Liu came on and discussed this factor that I was just talking about at the beginning of the video, highlighting the fact that in today's fractured globalization environment, their strategy is to expand their global manufacturing footprint to increase their customer trust, expand the future growth potential, and reach for more global talents. And I think the main theme here is the fractured globalization environment. After decades of countries being okay with importing manufactured goods, there's starting to be strong pressure from local citizens to bring manufacturing back, stop exporting our jobs. And so countries are now offering incentives for companies like Taiwan Semi to bring manufacturing to local regions, right? Bring your manufacturing to our country where you're trying to reach customers in our country. If you want to reach our customers, then have manufacturing here. And so that's what TSM is realizing. And to alleviate some of that concern, they are doing just that. And let's take a closer look at how they're going to do that. So their decisions are based on their customers' needs and the necessary level of government subsidy or support. So in addition to some of those risks, there's also a carrot in there, right? The carrot and the stick, right? The carrot is that governments worldwide are offering incentives to build manufacturing in the local areas, right? You've had the US offer over $50 billion to semiconductor companies to manufacture in the US. You've had other countries offering incentives as well on top of tax breaks. So countries want those manufacturing facilities in their own country, partly because it adds thousands and thousands of jobs. And it's popular when you bring jobs to your country, right? You can argue, well, it's better for our country if we import the things that are lower cost and we export the things that are higher cost, and overall in aggregate our country is better off if we import more. Those arguments don't sit very well with your local population. I teach this in my economics courses that, in aggregate, people are better off when there's robust global economies, when there's robust trade, when there's robust importing and exporting. It allows countries to optimize, it allows trade-off, it allows jobs to go where they can be most locally sourced and at lower prices, and overall everybody is better off. But that doesn't sit well if your whole career you were working as a call center agent, and then the company you were working for all of a sudden outsources its call center entirely to another country. You've just lost your job, but here you have some economists telling you that, oh, by outsourcing the call center, Amazon can save zero point 0.4 cents per call and thereby offer you your Amazon Prime membership at $1 less than it would have before, right? When you multiply that out by 200 million Prime members, yes, there's a big benefit there. But for that one person that lost their job because of that outsourcing, they're not going to be convinced with that argument. So this is why lately it's been popular. There's been popular support to bring back manufacturing to the local regions, and Taiwan Semi is not being deaf to those concerns, and they're expanding here. So one thing they're doing is in Japan, they're building a specialty technology fab. Volume production is on track for the fourth quarter of 2024. In Arizona, in the US, they're in close, constant communication with the government on incentive and a tax credit support, making strong progress in the facility supply chain infrastructure, utility supply, and equipment installation for their first fab. They're on track for volume production of the 4 nanometer process technology in the first half of 2025. Of course, this isn't the most advanced nanometer technology, but it's up there, right? Right now, the most advanced for TSM is the 3 nanometer process, and by 2026, they're going to have the 2 nanometer. So while this isn't the latest generation technology, it's still up there on the one of the latest versions from Taiwan Semi. In Europe, they plan to build a specialty technology fab in Germany, focusing on automotive and industrial applications, and that's expected to begin in the fourth quarter of this year. And they're also expanding the 3 nanometer capacity in the Tainan Science Park. This is in Taiwan. So they are expanding in Europe, in Japan, in the US, expanding their manufacturing footprint and becoming more local and trying to alleviate some of those concerns, right? Not completely, but to try and alleviate some of those concerns. These announcements, they've been announced with much fanfare. And when they open, there's going to be ceremonies and people are going to have jobs, and that's all going to create positive publicity, and that's going to be good for Taiwan Semi. Now, I mentioned the company is one of the best performing. You look at its revenue over the last decade has more than tripled from 20 billion up to 69.33 billion, all while it's expanding and demonstrating economies in scale. Its operating profit margin expanding from 35% up to 45.62%. But still, the valuation, I mean, the stock price is up significantly in 2024, but it's trading at a forward price to earnings of 18.48. That doesn't match with the performance of the business. With this kind of revenue growth and this kind of operating profit margin, you would expect the valuation to be in the 20s, in the mid 20s, 25 to 30. In fact, with these kinds of performance, if I were to compare with other companies with this kind of performance, they're trading in the mid 20s to high 20s, but not Taiwan Semi. And the bulk of the reason why that's the case are those geopolitical concerns. So if Taiwan Semi makes good progress on this front and alleviates some of that concern and this pressure to, anti-globalization eases up a bit, then Taiwan Semi can really boost its valuation on top of where it's already at. So I've had Taiwan Semi stock rated as a buy for some time now, and still I'm reiterating that recommendation here. I still think the stock is a buy, and I like the decisions that management is making to alleviate some of these geopolitical concerns. Now, this isn't going to be free. The management saying that while the initial cost of overseas fabrication are higher than its fabs in Taiwan, they're confident to manage and minimize the cost gap and remain committed to deliver profitable growth and maximize the value for shareholders. So there is a price to pay for this move, right? But I feel, and I think, and it's evident in management's decisions, that they feel that it's worth it. It's well worth it to alleviate some of those big risks at the price of some higher expense, right? It's not going to be as cheap to produce in other regions as it is in Taiwan, but all of those government incentives are going to help, and being closer to customers is going to help, and all of that will help offset some of those costs and minimize some of those costs of transitioning and having a little bit more manufacturing footprint outside of Taiwan. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.